Hello, this is Leroy Meadows, and in this session, we're going to talk about job order costing. Some things we want to accomplish this chapter is talk about job order costing in the job sheets. We want to apply job order costing in pricing services. We want to describe and record the flow of materials, costs, and job order costing. Describe and record the flow of labor costs in a job order costing system. Describe and record the flow of overhead costs in a job order costing system, and then close over-applied and under-applied factory overhead. So let's go ahead and get started here. So in order to understand what job costing is, I think we need to contrast it with process costing because these are two uh, ends of the continuum, if you want to call it that. Process costing. Let's go to process costing first. It is, in all essence, mass production. Repetitive procedures, similar products and services, high production volume, low product flexibility, and high standardization. So we have things here that are not customized, that rarely or not customizable. The same thing is done over and over and over again. Similar products, high production volume, and this is mass production. Some things we may think about with mass production, well, let's say bottles of ketchup, or the making of staplers, or cans of soda, things like that that are highly uh, repetitive. We're making the same thing over and over and over and over again. Um, the publishing of textbooks or any books in particular, um, that is process costing. Things that we're going to do over and over and over again. On the opposite side is job order costing, where we're going to deal with custom orders. Each order from a customer is going to be a little bit different than other customers. We're going to have a diverse products and services that we offer. Low production volume, because we're either going to make one or a small batch of similar items. With that, we have high product flexibility, so we can put together different combinations of A and B and C and so forth, and come up with a lot of different types of products that may be similar or not similar. And there's a little standardization because every job, every thing that we make or do or service we provide is going to be customized to what the client or customer wants. So job order operations is more customized, if you want to think of it that way, where we can customize what the client wants and then bill them for that. And we'll see that a lot in healthcare. You don't pay the same thing for a CT scan or a doctor's office visit as you do for chemotherapy. Um, big differences are there. Process costing is simply mass production. Uh, Toothpaste, ketchup, toilet paper, cans of soda, what have you. So let's look at um, the job order production and cost flows in job order costing. Um, Here we have one work in process, but we can have different jobs available throughout the month. And in fact, at the end of the month, some jobs will be completed and transferred to finished goods, and some jobs will not be completed. Remember that we have different levels of inventory. We have the raw materials, where we get the materials to do or make whatever job that we or service or product that we offer. Then we have the work in process inventory. Remember, this account here is for any jobs that are started but not yet completed. Once a job's been completed, it is transferred to finished goods. And when those finished goods are conveyed or transferred to the purchasers or to the customers, then we expense that off as cost of goods sold. Work in process is going to have 3 different components to it, remember. We're going to have direct materials. Those material costs, the cost of materials that are easily traceable to the specific job that we are doing. We have labor. Direct labor is the employee effort to directly convert materials to finished product or to the finished state in one job. And then we have overhead costs. Overhead costs are any costs that are, remember I said before in the last chapter, any costs that are either not direct materials or not direct labor, but they are involved in the process of providing that good or service. For example, we have indirect materials. That could be just the toilet paper in the general restroom. That can be, we can have factory depreciation, supervision and maintenance, factory insurance, property taxes, janitorial services in the factory, the utilities, labor in the janitor labor himself or the supervisor. So we're going to have a lot of overhead costs associated with production or in the production facility, but are not directly involved in the priming or the preparing of the product or job that we are being asked to do. So again, the cost flows, we're going to have the raw materials inventory, direct and indirect materials are going to all go to raw materials. Any materials that are requisitioned, direct materials will be assigned to work in process, and then whatever materials that are not direct in nature will be assigned to factory overhead or services overhead, whatever it is that we're doing. But even then, that will end up in work in process. So all materials, directly or indirectly, will end up in work in process. And again, work in process is the job that is being produced. Once that job is completed, it will be transferred to finished goods inventory. And that's where our completed goods are there waiting to be sold. Then we have the cost of goods sold, those finished goods that have been completed and have been purchased and paid for. So, and what we're going to see here with the cost of each job, we're going to have subsidiary records. So more individualized records regarding the specific materials that have been requisitioned, labor that's been used, and overhead that's been assigned. So let's just take a look here at the compilation of costs. And work in process is really just an accumulation or compilation of all costs associated with preparing a job. So here we have a job cost sheet, and this job cost sheet is simply going to be a record of all costs associated with a particular job. We have the customer's name in there, the job number they've been assigned, the job description, what are we doing for the customer, the date we started on it, the date we completed it, and the date it was promised back to the customer. Here we have a compilation of the total materials that have been requested for the job of direct materials. We have a list of the direct labor assigned to the job, and then we have our overhead that's being applied. And we're going to talk a little bit more about this later. As far as how do we systematically spread out overhead costs. And then if there's any notes in here, and then we have a summary of the total cost of the job here at the bottom, $700 materials, $1,000 of labor, $1,600 of overhead. So the job cost $3,300 to do. So now let's talk about materials. Materials. A few things we should note before we walk through this. We're going to order materials, and then we're going to keep track of them on individual ledger cards. Each material is going to be tracked separately from other materials. We want to keep those separated. Then direct materials will be assigned to job cost sheets and will be requisitioned directly to the job cost sheet itself. Indirect materials will be traced to factory overhead, and then at the end of the process, we'll see how factory overhead is allocated to the job. So whenever we purchase materials, we're going to debit raw materials inventory for the amount of the purchase, and we're going to credit accounts payable, assuming that we're buying on credit. If we're paying cash right away, then we would just credit cash. Well, we're going to debit raw materials inventory for the amount of $2,750, and accounts payable, we're going to credit that for $2,750. Now, here's an example of a materials ledger card, and the setup here, for the most part, is going to be very similar to what we saw in financial accounting when we were learning about first in, first out, weighted average, or last in, first out, how we kept track of how many we received, how many units we sold, and then what the ending balance in that inventory was. Well, this is a similar concept here. This is just redone for our purposes here at Road Warriors, and this is the illustration the book has been using. So we're going to go ahead and stay with that Road Warriors that will do custom paint jobs and put entertainment and sound systems in the vehicles. So each item is going to have its own material ledger card. So this card here is going to be for alarm systems. We're going to assign it a stock number. We're going to have the location of where it is in the warehouse or the storeroom. And it's going to give us some additional information. How many units are we allowed to have on hand or total at any one time? What is the minimum number of units we need to have at any one time? And then when we do reorder, how many units do we reorder at a time? Now, let's take a look at this chart here in the bottom. Beginning of the month, we had carried over from last month $600 worth of inventory. This is what carried over. End of last month's inventory is this month's beginning inventory. And from that, we're going to have three separate columns. We're going to have to track any units that have been purchased and received from our suppliers, any units that have been issued and transferred to the production floor, and then what is the ending balance after that action. And we'll update this in a perpetual manner as we go along. So we had a beginning balance of one alarm system that cost us $600. And on March 4th, we purchased two more units at $600 a piece. So we total purchase price of $1,200. So now what is my balance for alarm systems in this account? 3 units at $600 each for $1,800. Now on March 8th, one of those was requisitioned and transferred to the production floor. So this will illustrate that this will list out what has been transferred to the production floor. This will be the requisition number. We'll see what that is here in just a second. The number of units that we transferred out, the unit price, and so the total price there in case we have multiple units that are transferred out. But in this case, we only transferred out one unit. We had 3 units in inventory at $600 a piece for a total of $1,800. But when we transfer one out, that only leaves us with 2 units of inventory left at $600 a piece. So my ending inventory after the transaction of March 8th would be $1,200 in my raw materials for alarm systems. So this is just for alarm systems. And each material that we have is going to have its own ledger card system. We want to track each individual material separately. Now, a materials requisition is when we're requesting materials to be transferred from the storeroom or from the warehouse to the production floor so it can be used in the production of a job. So as we see here, this is going to be assigned to a specific job here in the right, the date that's being requisitioned, the person who requisitioned this, that made the requisition, and then who is the storeroom manager that actually filled the order. And on this materials requisition, we see that C. Luther requested for job B15 an alarm system, 1 unit of an alarm system, and then 4 units of paint. And that will be transferred to production floor. And then we see different material requisitions for different jobs as well. So in this case, job B15, we're requesting an alarm system and then 4 units of paint. Now, at the end of the month or end of the period, we'll usually record all these transfers, internal transfers from raw materials to work in process. We'll just make a general entry at the end of the month. So for direct materials, for specific jobs, we're going to add up all the materials that have been requisitioned throughout the month. So what's going to happen is once these have been requisitioned and we receive them, we're going to turn these in with the job cost sheets. Let's see, the job cost sheets here, we're going to turn in all the supporting document. So then that way we can track all the direct materials that have been transferred over as well as labor and overhead. So total direct materials requisition to the production floor for the month, 1,800. So we're going to debit work in process inventory for 1,800 and credit raw materials inventory for 1,800. And why are we doing that? We're doing that because we're transferring it from one asset to another. Remember, inventory is an asset. So if inventory is an asset, then I'm just transferring them from one asset to another, from raw materials to work in process inventory. So this is the transfer. So as we receive inventory, we debit raw materials inventory, credit accounts payable. When we transfer it to the production floor, we're going to debit work in process inventory, credit raw materials inventory for direct materials. Now, indirect materials, we'll deal with that here in just a little bit, but this is just for direct materials and direct materials only. Now let's take a look at the flow of labor costs in a job order costing system. So what we're going to have typically is time tickets. This can either be electronic like Kronos, or it could be written down on paper and pencil. Those people who are directly working on the production floor and directly involved in the making of the job or units that we've been asked to do, those are going to be assigned as labor, and those are going to be added to the cost sheets. Now, indirect labor, that labor that supports the production process but is not directly involved in the making or of the product or service that we're providing, that's going to be assigned to indirect labor, and that's going to be assigned to factory overhead ledger. Now, a lot of times this process is automated. Employees will swipe identification badges on a computer system, and then it'll automatically transfer those over. But sometimes it is on paper and pencil to have a backup just in case an automated system would go, or sometimes you're working on multiple jobs. They may be under one cost category as direct labor, but they may be working on multiple jobs in that 3 or 4 or 8 hour period. So you want them to keep track of how much time they're spending on each individual job, so the right appropriate amount can be assigned to the specific cost. So these are labor time tickets for when people have clocked in and either electronically or otherwise. And we're going to have an employee, and we're going to be able to have a time ticket for each employee so we can account for all their hours. We have their start time and end time, Then I'm presuming they go to lunch and then come back an hour later, and then at 5 o'clock. How many hours were spent on this particular job? Because we're having a time ticket not only for each employee, but for each individual job as well. So we're going to break that down here. So in this case, on March 10th, they spent 8 hours working on job B15. Then T. Zeller spent 8 hours again working on job B15. And then T. Zeller finished up at noon on March 12th. And so $200 of direct labor was spent on job B15 for a total of 1,000 hours of direct labor. Now, like materials, at the end of the month or end of the period, we're going to trace all the direct labor. We're going to take the total of all the direct labor from all the jobs, and then we're going to debit work in process inventory, and then credit factory wages payable. So all the direct labor will be charged or debited to work in process inventory for the month, and then credited to factory wages payable. And we could do this. We could also do this on a biweekly basis. Instead of doing it once a month, you don't have to do it only once a month. You can do it multiple every time a paycheck is issued, assuming everybody is on the same pay, same pay periods and everything, which most places are. You could do that biweekly or weekly. If you pay your employees weekly, you could just do this on a weekly basis here, because you're going to track all the direct labor anyway. So you can just do this once a week, once every other pay period, or even just once a month. Now, let's take a look at overhead costs in a job order costing system. So direct materials and direct labor have been pretty straightforward. We transfer from everything that's direct in nature is debited to work in process. Now we're going to deal with overhead costs. Now there's a lot to talk about for overhead and overhead costs. So we're going to look at 4 different steps that we're going to do from the beginning of the period to the end of the period that we're going to do in order to determine overhead costs. The first step we're going to do is set a predetermined overhead rate at the beginning of the period. We're going to apply then estimated overhead to each job. Then we're going to record actual overhead as it incurs. And then at the end of the period, we're going to close overhead to cost of goods sold. Now, unlike direct materials and direct labor, we cannot cost effectively trace overhead to each job. Still, each job has still got to have some estimated amount of overhead. So we need to figure that estimated amount of overhead into the cost of each job so we can set our sales prices based on that. Now, being able to estimate overhead in advance is going to require a predetermined overhead rate or an overhead allocation rate or an application rate, whatever term you want to use. Now, we do not have a crystal ball to know exactly how much overhead we're going to incur over the course of the next period or the next year. So some costs we can determine relatively easy. We can determine property taxes. We can determine insurance. But other costs, like indirect labor, indirect materials, other things, some utilities like electricity, water, we may not know exactly how much it's going to be, but we can be pretty good at estimating what our overhead is going to be. So we're going to figure now. Why do we use an overhead rate? Why can't I just say I'm going to spread out the cost evenly over each job? Well, again, if we don't have a crystal ball, we can't see into the future. We don't know how many jobs we're going to have. So what would happen if we thought we were going to do 160 jobs, and let's say we only did 130. Then there would be a big mismatch there. So what we're going to do, instead of waiting to the end of the period to figure out our actual costs and then spread them out, we're going to calculate a predetermined overhead rate in order to estimate the amount of usage of overhead to each job. And we want to use this rate instead of just spreading out equally over each job or over each unit. Another reason we would want to use an overhead rate is that not every job is going to require the same amount of resources or demand the same amount of resources as any other job. For example, the overhead cost associated with building a 500 square foot house is a lot smaller than the overhead associated with building a 5,000 square foot house. So different size jobs require different demand on resources. So we want to apply the overhead rate. So we want to estimate our overhead costs and get a total estimate for the year, for the period, and then divide that by our overhead base, or we would term this the cost driver. What is the cost that drives each job? In most time, and a lot of times, we'll use direct labor. Occasionally, we might use machine hours and other circumstances here. But for now, we're probably going to be focusing more on direct labor costs. So what we're going to do is Road Warriors is going to estimate their overhead costs, and they estimated their overhead cost to be $200,000 for the year. So how do we systematically spread that out? Well, Road Warriors is going to spread that out over direct labor costs. So, and they're estimating that direct labor costs are going to be $125,000. So when I divide 200,000 by 125,000, I get 160%, or 1.6 times of direct labor costs. So in other words, for every dollar of direct labor I'm incurring, I'm also going to add $1.60 of overhead costs to the job. So if a job requires one direct labor hour, then whatever, let's say $50, then I'm going to take that $50 times 1.6 and get the cost, and that would be the amount of overhead that I would assign to that job, in addition to the materials and labor costs that have been incurred. So again, I'm using a predetermined overhead rate. Why? Because I don't know exactly how much my overhead costs are going to be. I don't know how many jobs I'm going to do, and I don't know how much labor I'm going to get. So I'm going to have to estimate my overhead costs and divide that by my estimated overhead base to get a predetermined overhead rate. So for every single job that we do, we're going to take the amount of direct labor and multiply that by 1.6. Now with direct labor, it could be, pay attention, because it could be labor costs or it could be direct labor hours. So you want to make sure that you pay attention to that. But in our situation here, we're going to be 1.6 times of direct labor costs. So let's take a look at how this is looked at. At the end of the period, we're going to add up all the direct labor costs for all the different jobs. And in this case, we see job B15 had $1,000 of direct labor costs. And so we're allocating overhead rate at 1.6 or 160%. So the overhead that we're applying to that particular job is $1,600. So keep track of that as $1,600. Just keep that in the back of your mind. B16 had $2,000 in direct labor costs, and a predetermined rate of 1.6 equals the applied overhead of $3,200. So we're going to add to that job in addition to the direct labor and all the materials that have been direct materials have been added. And B17, $1,200 of direct labor costs times 1.6 gives me $1,920. Now I'm going to add up all of the applied overhead from all the different jobs, add that together. And then what I'm going to do is I'm going to debit work in process inventory, because remember, work in process inventory consists of three things: direct materials, direct labor, and overhead applied. So I'm going to apply my overhead now. I'm going to debit work in process inventory for $6,720, the total amount of overhead assigned to jobs throughout the period. And then I'm going to credit factory overhead. Now, we haven't really talked about the T account of factory overhead yet, but we're really getting into the point where we're going to be talking about that. But one thing I want to note before we go further is, do you see the amount of direct labor costs incurred? This job here, B15, required the least amount of direct labor costs. B16 required the most amount of direct labor costs. So if direct labor is the biggest cost driver, or the biggest cost that drives up, and a cost driver is simply any cost that drives the main portion of whatever it is of making that job or unit. We have a bigger demand on resources here in B16 than we do on B15. So here's another illustration why we don't want to assign the specific, equally dividing out overhead to each job, because you see some jobs here require more resources than others here. And B17 required a little bit more than B15, but still substantially less than B16. So for the allocation of resources, B16 consumed or used more labor costs than the other two jobs. So overhead applied, $6,720. Again, this is the amount of overhead that's been applied to specific jobs. So debit on March 31st, we'll debit work in process inventory for $6,720. Credit factory overhead for $6,720. So that's the first step here. Set the predetermined overhead rate, and now we've applied the overhead rate to specific jobs. Now, step 3, let's record the actual overhead. Remember, overhead is anything that is not direct materials and not direct labor. So it's indirect materials, it's indirect labor, and any other type of overhead costs in the production or service process. So what we're going to do is and that could be also utility bills, supplies, supervisor salaries, janitorial wages, different things like that. Plant depreciation. So what we're going to do is, for indirect materials, we're going to debit factory overhead and credit raw materials. Remember, for direct materials, we debited work in process and credited raw materials. For indirect materials, we're going to do factory overhead as a debit and then credit raw materials. Now, for indirect labor, we're going to debit factory overhead and credit factory wages payable. Other overhead costs, we're going to debit factory overhead and spread out and then credit the appropriate accounts that we need to do. Accumulated depreciation, rent payable, utilities payable, prepaid insurance. And these are actual overhead costs. So let me go for a minute here and give me just a second. Okay, and let's do a T account here to make this. And this is my factory overhead account. These are my actual costs incurred that are either indirect materials, indirect labor, and factory or manufacturing overhead. So all the actual costs that, as they come in, are being debited the factory overhead. as we allocate those unit or allocate the overhead to the different jobs, I'm going to credit that. So let me, and forgive my, and I'm just going to abbreviate this so I don't make the screen too horrible. And I'm just going to put FO for factory overhead. So I'm going to debit all my actual costs and credit any allocation to the specific jobs. And then at the end of the month, spread it out to work in process. So that's what we see here. Debit factory overhead, or let's see, debit factory overhead and credit the appropriate accounts here. And then that's for the actual costs. And then let's see. And the application of overhead right here is where I have my credit entry because I'm taking those costs. I've incurred those costs here, and I'm taking those costs here and I was allocating and spreading them out over the different jobs. So as you see the cost flows from the financial statements, you're going to see this from a balance sheet point of view and the income statement point of view. So from the financial statements, we have a raw materials inventory. We talked about that last chapter. And the transfer to direct materials. In the raw materials inventory, we're transferring direct materials to work in process. Work in process will have a beginning balance plus any materials added, any direct materials added, any direct labor incurred, and any overhead applied. And again, overhead applied is the predetermined overhead rate times the actual activity base used. And then as jobs are completed, and they will be considered cost of goods manufactured, and that cost of goods manufactured is transferred to finished goods. And finished goods, they will be sitting there until the job or the units are sold and paid for. Then they will be expensed off as cost of goods sold, and the cost of goods sold will be transferred to the income statement. For an accounting cost flow, here's what we see. And we see here our beginning inventory right here. And let's take a look at raw materials in the upper left-hand corner here. We have our beginning inventory for raw materials. This is where we made our purchase for the month, $2,750. Now we requisitioned $1,800 worth of direct materials to the job, or two different jobs throughout the whole period. So because they are direct materials, those costs are transferred to work in process. The indirect materials that were not assigned to work in process, the indirect materials, that is transferred to factory overhead. So we're tracing that to factory overhead here. And then we have labor, and then other labor here. Direct labor is debited to work in process inventory. Indirect labor is debited to or transferred to factory overhead. And then we have all the other accounts, all the other indirect accounts involved in production, but they're not direct materials or direct labor. And as you see the coding here and the amount and the total cost of the jobs for work in process, this total cost of the job, because it's still not completed, we would add up all the materials used, the labor, and the overhead applied, and we would add that up as of the end of the month to get a valuation of how much work in process we still have left. And as you see here, in fact, see here, finished goods, we have a job. Delivered goods, we delivered one of the jobs to our customer, so they're good. But we see here that this job is still work in process, so if we have multiple jobs in work in process, then we'll subtotal it as of the end of the period, add those together from all the different open jobs, and then that will be our balance and work in process inventory. So again, raw materials, direct labor are debited to work in process inventory. Indirect materials, indirect labor, and everything else is debited to factory overhead. And then on the basis of a predetermined allocation rate, we would compute how much overhead is applied. And that amount that is applied is debited to work in process inventory. We have our total amounts of debits in work in process inventory. We had the jobs that were completed and transferred out in the period. So that is this amount right here. And so we're going to debit finished goods, credit work in process inventory. Then as jobs are completed, we're going to debit cost of goods sold and credit finished goods inventory. So let's take a look here at summary cost flows. And this is what would have happened for the month on the books. And a couple things I want to point out to you. We did not, throughout the chapter here, we stopped at about here. So let's pick up where we left off. Goods are finished. We debited for raw materials. We debited for direct materials. We debited for direct labor, and we debited work in process inventory for overhead being applied. And then we recorded all the factory overhead that was accumulated throughout the month, all the actual overhead costs. The jobs that are in that were in work in process that have been completed and transferred to finished goods, I'm going to debit finished goods inventory for the cost of those jobs that were completed and credit work in process. And as they're sold, remember the selling of merchandise. We have two entries to account for. The recording of revenue here. There's a recording of revenue. But then we've also got to take the inventory. We got to take what we sold out of inventory and expense it off as cost of goods sold. So that's where we have this two-part sales process related to inventory. So just like merchandise inventory, once we sell something, whether we sold it or we sold it because we bought it and then for the purposes of resale, or whether we make it, we are going to have to record the sale of the revenue of the recognition of revenue, and then the recognition of the expense of the cost of goods sold there. So we talked about the schedule of cost of goods manufactured in the previous chapter. If you need more detail, if you need to go back and get a lot more details, I would recommend you see chapter 14 in the previous chapter. But here are schedule of cost of goods manufactured, direct materials used, direct labor incurred, the amount of overhead applied. So this is our total manufacturing cost for the month that we've incurred just for this month. Add that to our beginning inventory, and this is the total cost of our work in process. Now, we had no beginning inventory this month, but if we did, we would just add that and then get the total cost of work in process. From that, we're going to subtract out the value of our ending work in process inventory, and that will give us our cost of goods manufactured. And that is how we get this number and determine the cost of goods manufactured. And then we transfer that over, like we said, to finished goods. And that would be this transaction right here, number 8. And then let's do the income statement. Sales of $5,500 minus the cost of goods sold, $3,300. If you need the breakdown on how we get the cost of goods sold, it's just beginning finished goods plus cost of goods manufactured minus our ending finished goods inventory. And that'll be our cost of goods sold. So my gross profit is $2,200. So this deals with my inventoriable costs, and this is dealing with my period costs or non-inventoriable costs. So my gross profit minus my selling expenses minus my general administrative expenses, this gives me my net income here. So what would my balance sheet look like? Well, I would have the raw materials, ending inventory of $1,400, and we can go back here. And how do we compute that? Have my beginning balance plus my material purchases plus any purchases that were requisitioned as direct material or minus direct materials requisition and minus any indirect materials that were requisitioned and charged to factory overhead. So plus the value of my work in process inventory plus the value of my finished goods inventory. So my total inventory I record on the balance sheet is $10,820. Now, at this stage, we're going to look at closing our over-applied and under-applied factory overhead. Now, when we look at factory overhead, we're going to have our actual costs right here. We're going to have our actual costs. We've debited all the actual overhead costs to factory overhead. But what have we done with applying overhead? Remember that applied overhead was based on estimated overhead. And then we allocated on the basis of direct labor costs. So if we're estimating over here in our application of overhead costs, and overhead and here we have our actual costs, well, we're never going to accurately estimate every single cost. So at the end of the month, this is the cost that we best came up with, and this is the cost of the actual cost. So cost may have come in more or less. We could have done more jobs or done less jobs. So a number of factors so our applied overhead costs will never equal our actual overhead costs. So we're going to either have an under application of overhead or an over application of overhead. An under application of overhead occurs when our actual costs come in higher than the total amount of costs that we apply to all the jobs throughout the period. So our actual cost came in more than our estimate, or we applied accurately, but we didn't have enough jobs to apply. Either way, my actual costs came in higher than the amount of overhead that I applied. So what happens in this case is I did not apply enough overhead in the period to account for all my actual costs. So if that happens, then whatever the account is, I'm going to debit cost, or whatever the amount is of under applied, I'm going to debit cost of goods sold and credit factory overhead, because at the end of the period, we're going to have this to a zero balance. So we want to get this to a zero balance. So we need to close this out to cost of goods sold. Now, what if I applied more overhead to all the jobs than I actually needed to, because my actual costs were lower than what I had estimated? Well, in that case, I put too much cost into my products, so my cost of goods is higher than it needed to be. So if I have a credit balance in factory overhead after I've accumulated all my actual cost and applied all my overhead costs to all the jobs, and if I have a credit balance, that means I applied too much overhead and I need to claw or pull some of that back. So what I'm going to do to get this to a zero balance is for this amount here of over applied overhead, I'm going to debit factory overhead, credit cost of goods sold. So let's take a look at it from Road Warrior. We have indirect materials for factory overhead, $550. Indirect labor, actual indirect labor, $1,100, and other overhead that was $5,270. So I had actually $6,920 worth of overhead. I only applied $6,720 of that to the different jobs. So I have $200 of actual expenses that have not been allocated to different jobs. So what am I going to do? I'm going to debit cost of goods sold for that difference here to get this to a zero balance, and then credit factory overhead. So when I do that, I have a credit to factory overhead, $200 debit, $200 credit from this journal entry right here. That gets me to my zero balance. So factory overhead, we're going to close out. And for the most part, we're going to close out the cost of goods sold, assuming the amount is immaterial. Now, if the amount is material in nature, and remember the materiality principle from financial accounting, but if the amount is big enough if the amount is big enough to where it makes material difference, then we would spread that out over work in process, finished goods, and cost of goods sold. But we don't have to worry about that in this class. That will be dealt with in advanced courses like cost accounting. So, but for our purposes, and a lot of companies just do this anyway, they just close it out, whatever the over or under applied overhead, they close it out to cost of goods sold. So if you unapplied overhead, then you debit cost of goods sold for that amount. If you have over applied overhead, then you credit cost of goods sold for that amount, just like going right here. And you can see this right here. And I would recommend snipping this, taking a picture of it, what have you, so you know how to do that journal entry at the end of the month to close out factory overhead and to get it to a zero balance. Let's take a look at services really quick. Now, services can benefit from job order costing as well, because even though service firms do not have raw materials or finished goods inventory, they may not, they do have other supplies that they use, printers, not printers, but printer paper, copy paper, uh, pen, pencils, toilet paper, cleaning services, things like that. So service companies can also benefit from job order costing because their jobs they may complete aren't necessarily tangible in nature as far as making a product or converting something. But think of like tax preparation. No two tax returns are alike. So a person with one single W-2 might pay a lot less than someone with a lot of W-2s and some other types of income that require more work, and so that may be a higher cost for the company. So, um, so when we charge a customer, we can definitely use job order costing for a lot of different areas, a lot of different service firms. Think of power washing houses. You power wash a 500 square foot house, it's going to take a lot less water, a lot less labor than it is to power wash a 3,000 or even bigger or square foot house. So the amount of work. So we have job order costing for services. So job order costing is not limited to the manufacturing environment or the production environment, but it can also be used for services and service accounts and service companies. So let's take a look at job order costing and pricing services. Remember, they have no material, but they are going to have direct labor. And let's take a look at advertising services for a company that does AdWorld, an advertising agency that develops web-based ads and ads for other types of media. Each customer has unique requirements, so they're going to look at two types of labor: designers and then staff assigned to that particular ad. And this will be my total direct labor costs. And then I'm going to have other overhead costs. And how do we treat overhead in a service environment? The exact same way as we treat it in a manufacturing or production environment, where we estimate at the end of the job, we estimate how much overhead to allocate based on direct labor hours, using our predetermined overhead allocation rate to get an total estimated cost of the job. Now, one thing I want to point out is, let's say that I have, and let's just say this company, AdWorld, I don't know their specific markups or whatever, but just for point of illustration, let's say they have a 20% markup. So they set their sales price at a 20% markup. So I'm going to take $1,777. Multiply that by 0.20, and that'll give me the amount of markup I would need. So let me just real quick here get my calculator out and take 17,077 times 0.20. So the amount of my markup is going to be $3,415.40. So that's the amount of profit I want to have. My markup is going to be the amount of profit I want to have from the job. So when I take my costs and I add that to my markup, so plus 17,077. So the price I'm going to sell this ad for to my client is going to be $20,492.40. Now that's just a hypothetical markup. Your markup can be 25%, it could be 80%, it could be 2%. It just depends on the type of service environment that you're in and what you can get, what your competitors are offering, and so forth, as well as your actual labor costs themselves. So there's just an example of pricing for services. You take your cost times your markup, and that'll give you the markup component of $3,415.40. So 34.15. And that is my markup. And that is added to the cost to get a total sales price to the customer. And what do we say, 20,000 something? Go back over here. Where did my mouse go? Because my mouse keeps disappearing. There it is. $20,492.40. So that is how we price for services. We don't have materials, but we do have direct labor and then other overhead. We just compute the cost and then set the markup. Now, I could use this same markup principle for the items that we sell, that we make. Like in the earlier example, throughout this chapter, we can use that same concept, mark it up by X%, whatever that job cost is, or the estimated job cost, and then add that to the add that to the actual cost, and then get a sales price. So we can do that as well. So real quick, gross profit ratio for service companies. For manufacturing companies, merchandising companies, remember our gross profit was service or was sales revenue minus cost of goods sold. So whatever our gross profit was divided by our sales revenue was our gross profit ratio. Well, for service companies, it's going to be a little bit different. We're going to have a service revenue minus our cost of services, whatever the cost of services was. In this case, it was $17,077. So whatever we sold that, whatever we charged for that job, minus the cost of services, divided by the cost of that job. Now, I want to make sure that we are aware, and I did this in the last chapter too, putting parentheses around this. Why? Order of operations, basic math from 2nd and 3rd grade, where if I take service revenue minus cost of services divided by service revenue, if I just input that into my calculator without putting the parentheses, it's going to take this cost of services divided by service revenue, and then that will be subtracted from service revenue, and that's not what we want. That'll give us a completely incorrect answer. So make sure that you take the service revenue minus cost of services first, get that total, and then divide by service revenue. Or if you have a scientific or a business calculator, you can just put this part here in parentheses. If you just put this part in parentheses and then divide by a service revenue, your calculator should do correct calculation there. So anyway, this is the end of the chapter for job order costing. Have a good day.